Hi students, in the last class we saw on the purchase book, okay, and as well as the purchase return book, and I hope all of you understand that the purchase book as well as the purchase return book, okay. So now in this session we will saw the sales book as well as the sales return book, okay. So now see what in by sales book. Sales book is what it is, a subsidiary book, okay. So in the subsidiary, while learning the subsidiary book, we saw which are the subsidiaries book, okay. The purchase book, purchase return book, sales return book, okay, bills receivable book, okay, cash book. So it is nothing but the subsidiary books, okay. So this sales book, it is nothing but the, so it is a subsidiary book, okay. So which is used for recording the goods sold on credit, okay. It is also called sales journal or day book, okay. So this sales book is called what's the sales journal or the day book, okay. So now see what by sales book, which are those transactions are recorded in the sales book. So only which are those goods sold on credit basis, okay. Only sales goods on credit basis, these transactions are only maintained in the sales book, okay, except the cash transaction and except the furniture sold, also except the asset sold, okay. So these transactions are not recorded in the books of the sales book, okay. So now see, this is the format of the sales book, okay. The date column, particular column, outward invoice column, LF column, and the amount column, okay. So like this we have to draw the format, okay. So now see, we will see one more problem on that. So problem number 1, okay. So from April 1st, sold goods to Shankar 4 quintal small rice at rupees 325 per quintal, okay. So it means what? Business sold goods to what? To whom? To Shankar, okay. The 4 quintals, okay, and the small rice at rupees 325, okay. So each quintal is rupees 325, and like the, so 4 quintal they sold, okay. So it means what? It is the sales transaction, it is the credit transaction, because this cash word is not mentioned, okay. Particular name is given, okay. So now see, 1st April, this is the format of the sales book, okay. In the date column write the date, April 1st, okay. On the Shankar, 4 quintal small rice into 325 at per quintal, okay. So it means what? 4 into 325, it's 1300 is the total amount, okay. So next on 6th April, sold goods to Kumar 2 quintal of jawar at rupees 125 per quintal, okay. So in this transaction also the business sold goods to Kumar, okay, 2 quintal of jawar, and the each quintal price is rupees 125, okay. So now see here, so April 6 Kumar, so 2 into 125, it's a 250, okay. So next on 15th April, sold goods to Babu 2 quintal of small rice at rupees 300 per quintal, okay, per quintal. So it means what? So business sold goods to Babu at the 2 quintals at the rate of rupees 300 per quintal, okay. So it means what? It is the credit transaction, it is the sales transaction. So this we have to maintain on 15th Feb. Babu 2 quintals at rupees 300, it's a 600, okay. So next on 20th April, sold goods to Madhu 3 quintal of jawar at rupees 1150 per quintal, okay. So this is also the sales transaction and it is the credit transactions, this also we have to maintain. So this on 20th April, Madhu 3 quintals at rupees 150, it's a 450, okay. So next on 30th April, sold goods to Babu, sorry, on 22nd April, sold furniture to Basavaraj at rupees 1500, okay. So now see, this is the transaction, sold furniture, okay. So what I said in the meaning of the sales book, what mean by sales book? Sales book means what's in the sales book? Only the credit transactions are recorded in the sales book which is related to the sales, okay. Whatever the sold goods on credit basis, these transactions are only recorded in the sales book except the cash sales and the sales of assets, okay. And so in these transactions, the sold furniture, it means what? It is the assets, okay. So these transactions are not recorded in the sales book, okay. So now see last transactions, 30th April, sold goods to Babu rupees 12,000 at 10% trade discount, okay. Sold goods to Babu, so it is the credit transaction and it is the sales transaction of rupees 12,000, okay. From this 12,000 we have to minus the 10% discount, okay. So now see on 30th April, Babu 12,000 amount less 10% discount. On this 12,000 we have to minus the 10%, it will be there 1,200, the total will be the 10,800, okay. Like this we have to solve and make it total of the amount column, 1,300 plus 250 plus 600 plus 450 plus 10,800, total will be the 13,400, is nothing but the total of the sales book, okay. Like this we have to solve the problem on the sales book, okay. So now see, this is the sales return book. So it is a subsidiary book which is used for now see the sales return book. Okay, so now see, it is a subsidiary book which is used for recording the goods returned by the customer. It is also called sales return journal or return journal book. Okay, so now see, this sales return is called or return sales return journal, okay, or the return journal book. Okay, so now which are those transactions are recorded in the sales return books? So which is only after selling goods to the customers. Okay, after selling the goods to the customers, customer again return goods to the business. Okay, so these transactions only are recorded in the sales return book. Okay, so now see, this is the format of the sales return book format. So date column, particular column, LF column, and the credit column. Okay, sales return books we have to prepare the credit notes. Okay, and while preparing the purchase return book, at that time you have to prepare the debit note. Okay, and so the amount column. Okay, so like this you have to draw the format. Okay, so now see the problem. Prepare a sales return book 2008. On 1st January, bought goods from X company limited rupees 1000. Okay, so this is the bought goods. Okay, it is a purchase transaction. What it is a purchase transactions. Okay, the purchase transactions are not recorded in the sales return books. Okay, so next on 12th January, sold goods to Priya rupees 12,000. Okay, so this is the sales transaction. It is not the sales return transaction. Okay, it is the sales transaction. Next on 16th January, Sunil sold goods to us rupees 5,000. Okay, Sunil sold goods to us. Sunil sold goods to us means what? Us means what? To the business. Okay, so it is the purchase transaction for the business. Okay, so next on 18th January, return goods by Priya rupees 500. Okay, so return goods by Priya. Okay, so it means what? So now here, so on 12th January, sold goods to Priya. So business sold goods to Priya. On 18th January, after purchasing this Priya returned goods to business rupees 500. Okay, so this is the purchase return. So now record the purchase return transaction on 18th January in a particular Priya account. Okay, so amount is what? 500. Okay, so next on 19th January, goods returned by Manju. Okay, returned by Manju. Okay, so it means what? First of all, goods sold to Manju, and out of that Manju again return goods to business. Okay, so it is a 250. Okay, on 19th January, Manju account, it's a 250 rupees. Okay, next on 24th January, return goods to Sunil rupees 900. Okay, so what it is the return goods to Sunil. Okay, so it is the purchase return goods to Sunil. Okay, it's a 2, it's not from the Sunil. Okay, so it is a return goods to Sunil. It is the purchase return transaction. Okay, so it is not recorded. Next, Manju return goods us rupees 150. Okay, Manju return goods us rupees 150. So it is the sales return. So on 28th January, Manju's account 150. So total is what? 900. Okay, so like this we have to prepare. Like this we have to prepare the like this you have to prepare the sales return books. Okay, as well as the sales book. Okay, so I hope you will be understand, and all of you note down these problems. Okay, so I hope you will be the understand. Okay, so thank you.